Hey, welcome back to YT Finance, and today we are talking about the 5 best dividend stocks that are literally trading way too cheaply to ignore right now. This is going to be part 2 of our original video, so if you haven't seen the original video, go back and watch that video before you watch this one. But honestly, you don't need to watch them in any particular order because, like I said in the last video, these companies are not in any particular order. These are all very cheap, strong dividend companies that are growing into their overall valuation. So if you want more dividend stock videos, or if you want to know what are the best stocks to buy on the market right now, or the stocks that I am buying on the stock market right now, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and also I'm going to come out with a new series on Friday where I show you all my portfolio, which we will get to $100,000 in the next year or two. So you're going to be able to take a look at a portfolio that I am literally making right now that will hopefully reach $100,000 in the next year or two. So if you want to see that, remember to go and comment down below, smash that like button right now, and without further ado, let's jump right into today's story. So right now, we're going to start off with a company called Matthews International Corporation, ticker symbol MATW. Right now, the share price for this company trades for $22.23, while stock experts believe the company is very undervalued because it should be trading between $40 and $46. Now, the reason for this gigantic discrepancy between the current stock price and analysts' price targets is because there are only 2 analysts currently covering this stock. So as always, we not only need to take these price targets with a giant grain of salt, but because only 2 professionals have actually looked at this company, we have to take this as a giant grain of salt. So maybe it's not even that undervalued, but according to 2 analysts, yes, this company is undervalued. But that's not the reason why this company is on our list for this video. If you didn't know, Matthews International Corporation is a provider of brand solutions, and it offers its services globally. I also want to point out that recently it's undergone 2 acquisitions because it has bought out 2 German engineering firms, which together these firms have revenue of around $100 million. But the reason this company is on our list is not due to its stock price appreciation potential, nor its recent acquisitions, which was a fantastic move, but rather because it's been consistently increasing their dividends for the past 23 years. So if you want that sweet passive income from a relatively cheap stock that has pulled back recently, this could be the company for you, but always make sure to do your own research to make sure that this company aligns with your personal risk tolerance and your investing style and strategy. I'd also like to bring to your attention that this company pays a quarterly dividend of 22 cents per share, which equates to a dividend yield of around 3.96%. So clearly not a crazy dividend, and if you want crazy dividend yields, you would need to go to the video that I made 2 videos ago where we talked about companies that literally have around a 13% dividend yield, which is absolutely insane. But for this particular company, let's refocus ourselves because B. Riley maintains a buy rating for this particular stock with a $22 price target. Now, clearly, that means this company is fairly valued, so we can kind of scratch off those other 2 analysts that said that the company could be worth anywhere between $40 to $46 over the next 12 months. I personally would trust B. Riley's price target of $22, which means right now it's fairly valued. And again, we would want to buy this company for its consistent dividend payout and how long it's consistently been increasing their overall dividend for 23 years in a row. I'd also want to acknowledge that this company is very financially strong. They have great fundamentals and their balance sheet is very resilient. So during times of macroeconomic uncertainty, while the stock market is pulling back right now, this could be a good refuge or a stock to add to your portfolio that could prevent you from losing money unnecessarily. But as always make sure to do your own research. That brings us to our next company that we will be analyzing today, which is Partner Products L.P, ticker symbol EPD. which currently trades at $24.99, while professionals believe the company should be trading anywhere between $27 and $36. So yes, I would say this is a hold company, or a company that we should hold, but technically it is undervalued according to stock professionals. But again, we should always take these price targets with a grain of salt and use them only as a guideline and not as something that will actually happen. If you're not familiar with this company already, this is a Texas-based company that specializes in natural gas and crude oil because they're a pipeline company. And I'd also want to point out that this is one of the largest corporations in the United States by revenue. They also have a decent dividend coming in at 47 cents or 47.5 cents per share, and this is a quarterly dividend if I'm not mistaken. This company has also increased and raised their dividends for 22 years in a row, which means that this is a very strong dividend focused company with a dividend yield coming in at 7.6%. I'd also want to highlight that Truist actually has a price target for this company of $30 with a buy rating. So not only does this company have a future stock price appreciation that will be factored in, but also it has a strong dividend and a buy rating among professionals. So this is definitely a company to dive further into before you invest into it, just to do your own due diligence and your own research. But overall, this definitely makes our list of a cheap dividend stock that offers a good dividend, that they have increasingly been increasing their dividend 22 years in a row, and their dividend yield is very strong, coming in at 7.6%. So this is definitely a stock that is deserving to be on our list of cheap dividend stocks with high dividend yields that will give us passive income and will also add some stability and a good cornerstone foundation to our portfolio. Because even if the stock price falls, you can use this dividend to reinvest back into the company, which will increase the overall dividend that you receive from this company. So overall, I really like this company for that particular metric. The next company we're going to talk about is an energy company, and I've talked about this company a multitude of times, and that is Coterra Energy Inc., ticker symbol CTRA. The current stock price is fairly valued, coming in at $29.20, while stock experts believe the company should be trading between the range of $26 on the low end and $54 on the high end, which it's doing right now. If you didn't know, or you're not familiar with this company already, this is an American company that engages in the exploration of hydrocarbons. Now, unlike the other companies that we talked about, this company does not have a very long track record of consistently paying out or increasing their dividends. Right now, it remains around a 5-year streak of consistent dividend growth, which is not bad because all companies have to start somewhere. But to put it into perspective, the company does offer a quarterly dividend of 60 cents per share, or rather 65 cents per share, and that would equate to around a dividend yield of 2.05%. So clearly in this company it has a lower dividend yield, but hopefully it can make up for it in stock price appreciation, which I already think this company is somewhat fairly valued right now. So I'm not sure what I really think about this company, even though this is in a lot of dividend articles. I personally don't have a large amount of exposure to this company individually. I would much rather invest into a ETF that offers me very good dividends, such as MTUM or SCHD or other ETFs that I mentioned. Those have way better growth rates, and they allow you to diversify your overall holdings while also gaining you very strong dividends, in my opinion. But if you're one of those investors that would rather deal with singular stocks to add to your dividend portfolio, and if you're buying and selling stocks, then maybe this could be good for you. But overall, I am not a giant fan of this particular company as of right now. Now, despite this, Citigroup recently chimed in on this company and gave it a price target of $30 per share, which again would make this company fairly valued because it's trading at around $29 and the price target for the company is around $30. So this is another company that is fairly valued. I'm not too impressed with this company, but some people really like it, and that's why I at least want to mention it and put it on your radar, because like I said earlier, this particular company is in a lot of dividend articles that I have analyzed. So I just want to make you aware of that. Now, coming in on the number 2 spot, a little more expensive here, coming in at $30.50, is Walgreens Boots Alliance Inc., ticker symbol WBA. This company, I think, is somewhat fairly valued, even though analysts believe the company should be worth valued between $32 and $45. But again, I think this company is fairly valued as of right now, and it does have a good dividend of 48 cents per share if you decide to purchase shares of this particular company. If you're not familiar with ticker symbol WBA, this is an American British Swiss holdings company that owns a variety of different pharmacy chains and many pharmaceutical companies. Now, the reason why this is a pretty good company overall is although the stock price tends to trend downward over the long term, their dividends increase over the long term. So it's really dependent on what type of investor you are. Are you looking for that stock price appreciation? Because if so, this is not the company for you. But if you're looking for that dividend appreciation and that passive income, then this could be a good company. Another thing I want to point out about this company is that because it's in the pharmaceutical space and it owns many retail pharmacies, the healthcare sector overall is very resilient during times of stock market uncertainty. So these are particular products and services that won't go quote unquote out of style even during a recession, because everyone's always going to need pharmaceuticals and or healthcare services, which makes this company a very resilient company to add to your portfolio. I'd also want to highlight that this company has raised its dividends for the past 47 years consecutively in a row while paying a pretty good quarterly dividend with a yield of 6.29%. And again, as the stock price falls, that dividend yield increases. So it really depends on what type of investor you are and what strategy you wish to implement for this particular company. A Mizuho analyst has also chimed in on this company and given the stock a $36 price target, which is above the current stock price of $30.50, but it just depends on how much weight you want to attribute to that Mizuho analyst and their price target. I personally think, like I said, that this company is fairly valued as of right now, which doesn't make it a bad buying opportunity, but it also doesn't make it a good buying opportunity. If anything, I would wait for this company to fall in price a little more, especially as we enter a time of stock market uncertainty, and that's when I would start buying up healthcare companies, consumer discretionary companies, and other defensive type stocks, particularly dividend stocks that are going to pay you during times of stock market uncertainty. And that's why this could be a good company, but maybe not right now. But again, many investors, particularly dividend investors, really like this overall company, but ultimately the choice is up to you. Comment down below if you already own this company in your portfolio and if you plan on adding more or not, which is going to lead us to our number one pick, which is going to be one of my favorite dividend stocks, honestly, which is Innovation Homes Inc., ticker symbol INVH. Now, if you all know me, I am an absolute bull on REIT companies, and this is a real estate investment trust, also known as a REIT. This particular company is based in Texas, and I'd also want to say that I believe the company is undervalued right now, only coming in at $32 per share, while price targets range anywhere between $36 on the low end and $52 at maximum. But to even add more fuel to the fire, Barclays, which is a very prestigious institution, has recently maintained an overweight rating or a buy rating for the stock with a price target of $41, which they believe this company could achieve over the next 12 months, and I 100% agree with them. I own this company, I like this company, and not only for the dividend, but I also really like the stock price appreciation of this company. You know you have found a great company when the stock price continuously appreciates upward and they have a good dividend and they are increasing their overall dividends. For instance, talking about their dividend, they have increased their dividends for the last 4 years, and it currently pays a dividend yield of 22 cents per share that you buy. So not only is this going to give you passive income in terms of stock price appreciation, but it's also going to give you passive income in the form of dividend income, which means that their dividend yield currently is 2.72% overall. And this is definitely one of my favorite, even though the dividend yield is not as high as other dividend investors would like. I think that it's very worthy of an investment because the stock price is increasing while the dividend is increasing. So you're making passive income in more than one way here, but it all comes down to what you think in your investing style and your strategy. Remember to go and smash that like button right now for more videos just like this one. Subscribe if you are new, and I will see you in the next YT video.